Welcome back to the Retire While You Work podcast. My name is Carson Odom, wealth advisor here at Adams Wealth Partners, joined by Myles Zuger, another wealth advisor at Adams Wealth Partners. It's a perfect fall day, some beautiful fall weather outside, and what better way to spend it than sitting inside talking about budgeting? Perfect.
Not a better use for a beautiful day than working.
A beautiful Friday. That's right. I'll give my quick background on budgeting. I feel like frequently on this podcast, we've talked about ways to track expenses and the importance of tracking expenses, and we still feel very strongly about that. And anytime we talk about budgeting, a lot of times it gets a bad rap. People, when they hear budget, they hear Dave Ramsey, envelope system, super, super hardcore crackdown. And I don't necessarily view it that way. I think that's one extreme. The other extreme is having no idea where your money goes. And usually you end up spending more than you make. That's how you get into a pretty dangerous trap of spending more than you make and going into credit card debt, so on and so forth. I think regardless of income level, regardless of how much cash flow you have coming in, some form of a budget is important in being in control of your finances. And there's different ways to budget, but just having some sort of method of tracking expenses and holding yourself accountable to those expenses is important. That's my 2 cents. What do you think, Miles?
Yeah, I think the vast majority of, if you ask them if they have a budget and they say no, I think everybody should have some sort of, and I won't even call it a budget, but just an idea of each month where your money's going. Obviously, there's hopefully going to be months when you're taking a trip or doing some work on the house when you're going to go above your budget. But those are maybe things you're building in from the start of the year, in a sense, into the budget that you're planning on doing and budgeting for. But I think some people get maybe turned off by a budget because they feel like, if it takes me, $5,000 or whatever the number is to meet all of my expenses each month, I can't go up over that, and then don't know what to do maybe if they're under that for the month and like where to save and stuff like that. So I think, the best budgets work kind of fluid in that, you're not so strict that you're, writing down every single expense or tracking every single expense down to the penny that you are taking or spending.
I do
But
that.
I mean, some people do that. And I think to my point, that works for you. I
Yeah,
don't
that's
necessarily
right.
do that, but I have a tracking tool that I utilize, and I know, where money's going each month and what we are generally spending each month, and that works for us. So I think it's one of
Mhm.
those things where you just kind of need to figure out what works for you. And today we have, a couple of ideas we would want to share for people to consider, but doesn't mean it's the best option for you, and it doesn't mean that's what you have to do, but it could maybe help to provide a framework to get you on the right track if you don't have nothing, perhaps.
Yeah, that's right. Look, at the end of the day, a budget is just planning, and it's not just on the expense side, it's on the income side as well. The first and foremost, the best thing you can do for a budget, if I could just put it in gold letters, pay yourself first. That's it. Just pay yourself first, I think, is one of the best things that you can possibly do. Before you even sit down and budget and work we're almost pretty much at the end of October, going into November. Okay, if I think, I'm just going to use round numbers here, I'm going to make $10,000 this month. After taxes come out of my paycheck, maybe I get paid twice a month. Even if I'm self-employed, I'm going to transfer over to my personal bank account 10 grand a month. And automatically you say, okay, $1,000 transfer to savings, transfer to my brokerage account, whatever. Now, the rest of my budget, I'm working off 9 grand. That's called paying yourself first. What that means is, even if at the end of November, 10 grand has turned into $0 left over in your checking account, perfectly fine, because you have paid yourself first, you have saved money in your savings account, and even if you spend the rest of that $9,000, you are in great shape because you've already saved money. Obviously, you want that percentage to increase, and there's different ways to save. Maybe you're saving a Roth IRA, brokerage account, 529s for kids, who knows? But what matters is you are setting money aside that you are still retaining ownership of through a savings vehicle, and the rest of your spending falls into place. And even if you have no more money left over, you've already accomplished a part of saving first. A lot of times, if you try to do the opposite, say, okay, let me start with 10 grand, let me get through the month, and then whatever money, I should be fine. Whatever money's left over, I'll just transfer, to my savings account. 99% of the time, there's not any money left over.
Yep. Because I think one thing people in that situation do is like, they may say, hey, I feel like I could maybe save a couple $1,000s at the end of the month. So they go into it in the kind of the reverse there by saving at the end of the month by saying, let's just pay all the bills. I should have, maybe I'll have a couple thousand left to tuck away into investments or savings, whatever it might be. And to your point, Carson, they get to the end of the month, they have zero. Whereas if they would have just done at the beginning of the month, even just $1,000 or whatever that amount is that works for them, you are, that's half of what you said you were going to save at the back end, but it's oftentimes more than what you end up saving because you built that expense in. And it just creates discipline to where it's like, if you want to go out to dinner with friends and, on that 9,000, that's a piece of the kind of the spending amount there. If you want to go out to dinner with friends, you're not feeling guilty because you already did the saving that you were planning on doing. And you're not getting to the end of the year, the end of the quarter by trying to figure out what you're going to save. You're doing it along the way so that throughout the year, if you spend a little bit more throughout the month than you were planning on, you still save. If you're doing $1,000, you still tucked away $12,000 that year that most likely because you paid yourself for it, you didn't really realize it was gone.
Exactly. And ultimately, budgeting leads to freedom in spending money. It's not a restrictive thing. It leads to freedom because it's one of those things. Okay, you're left on 9 grand. Maybe you give yourself $1,000 on groceries and restaurants and stuff to spend money on. Whether or not you're a family, single, that number's varies person to person. But maybe you got $1,000. If you want to go out to a nice steak dinner and spend $250 on a dinner, do it because you've got the budget allocated for that month. If you can live on the rest of it, pretty cheaply, you don't have any big nights out with friends, or it's a pretty normal, you do your meal plans, stuff like that. It gives you the freedom to do big expenses like that without the regret of, oh, I shouldn't be spending this money. If it's budgeted to that food category, so be it. Spend it how you want to. Or if you've got, X amount of dollars spent towards shopping, even if you want to go buy an expensive item you've wanted, if it's in money that you've categorized as going towards shopping or whatever, spend the money however you want to because you've already saved, you've already paid yourself first. So by having some sort of budget truly allows you freedom to spend it how you want to inside of those categories. Now, if there's anything I've learned with being married almost 10 years and having 2 kids, there is no normal month when it comes to spending and budgeting, whether it's random things like having to pay for school pictures or a field trip or anything and everything. Life happens and you're going to have random things that come up in a month. Plan for or expect the unexpected. So essentially plan for it, have a miscellaneous item, category if you're budgeting stuff out, couple $100, $250 for random stuff that's going to happen because I guarantee you it'll pretty much happen every single month.
Yeah, I kind of what you're saying. The next step is really just breaking down every single category you have expense and say, this amount's going to the mortgage, this amount's going to groceries, all the way down the line. And then even if you do all that and you feel like, there's maybe call it at $500 or $1,000 that's discretionary, that's where you have the option to decide. One month you may, to Carson's point, you may go buy an expensive item. The next month you may say, hey, there's nothing I really want. Don't have a lot going on this month. I'm going to save that. And then you save an extra $500 that month into investments or your checking account. So to Carson's point, it creates a lot of freedom. And also I was going to say, you were talking about how no normal months. We had a client in here a couple months back. They had a notebook that said, I think it said something like, life is just saying over and over, next month things will slow down until you die. And I was like, there's a little bit morbid maybe, but I was like, there's never been a more true statement because I think my wife and I say, October is going to be a slow month and nothing going on. And then like car insurance hits for the year, or, November and you have Thanksgiving going to see family. And then it's December and you're traveling to see family again. And then you say, all right, things will slow down in January. And then eventually something happens and it keeps going on. So I think that's why budgeting is so important because there's always going to be something going on.
Look, and before we even get into, some rules of thumb to use if and when you're budgeting, we've talked about this multiple times. Before you even start to make a budget, you have to have something to go off of. Track your spending for a month or two. Use an expense tracking app. There's tons of them on app stores, tons of websites, softwares that do it for you. Pay the $10 a month or however much it is to get insight on how much money you spend. Because if you try to budget, you're not going to get very far. You're going to get the feeling of being defeated if you try to budget just off of some random numbers. So use an expense tracking app. Don't try to budget for a month or two. Use it to learn about your spending habits and then take it. Like, for example, if we're going into November right now, download something, track your expenses for November, December. Just learn about yourself, learn about your family, how much you spend, where you spend it, just so you can observe how you spend money. It's going to be a little off going into the holidays, but that's an asterisk there. There's another unnormal month of spending. And then that way you feel prepared to go into January of, okay, let's try to stick to some stuff. With the reality of know that you're not going to be perfect. Your budget's not going to be right on the money. So give yourself grace as you're trying to get into a habit of, okay, let me track my spending. Let me stick to something. I want to try paying myself first, even if it's small amounts. Let me sock $100-200 away, especially if you're living in an expensive place, and you're on a limited income. Start small, do $100 a month. The reality is that's $1,200 over the course of the year if you can stick to that. And that stacks up. What a great discipline to have, I think, across the world right now, is live on less than you make. And just by paying yourself, you're doing a lot of good for yourself and for your future. So that's just one note about budgeting before we get in here about, some rules of thumb to use.
Yep. And I think we're just talking about regular income so far that's been coming in. I think it's also important if you're fortunate to be at work in a business or have a career where maybe there's bonuses that you're able to work towards and receive. It's also important to, I think of maybe ahead to how you want to budget those bonuses, because if not, you may just get, around the holidays or whenever bonuses are paid from employers, you may just get a bonus and then it kind of becomes like free game to what you want to spend that on, when really you could have been a little bit more strategic on it with, maybe paying down some debt, investing a little bit more, looking at some retirement contributions if you're able to do those sorts of things. So I think with bonuses, it's just important to plan ahead. Generally, I think most people, if they're eligible for bonuses, have some sort of idea on what they might be. So I think, maybe plan on the low end of what you think it might be, what you want to do, assuming it's going to be that amount. And then if it's higher, kind of there's maybe some free cash to do whatever you want with, but incorporating those in a planned way into your overall financial plan also, I think, helps a lot, so that money isn't just, spent on dinners and drinks and stuff like that with friends.
Yep. And know if you are paid every 2 weeks, you're probably used to this, but twice a year, you have a month where you get paid 3 times. And if you work your budget, you can either work it off a 4-week schedule, not a monthly schedule, just to account for the fact that you're paid every 2 weeks. But you could use those months where you get paid an extra paycheck, because that is zero spending. That is just socking it away into savings. That's a great thing you could do. One really common, to get into actually building your budget, one really common thing is something called the 50-30-20 rule, which is essentially, to give you the breakdown, it is 50% of your income spent on needs, 30% on wants, and 20% towards debt/savings. So the needs, this would include things like housing, utilities, food, insurance, that sort of thing. Wants are going to be some travel, going out with friends, shopping, subscriptions, maybe you almost could put that into a need. And then, of course, the savings and debt repayment, 20%. That's going to vary person to person depending on what your financial situation looks like. If you have a lot of debt you're trying to get out of and get ahead from, maybe the savings is going to be scaled back for a little while.
I like that one for somebody who's maybe just getting started with having nothing, because typically those needs you mentioned are going to be the bigger pieces of their plan, or where more expenses are going to go. Wants you can be a little bit more flexible with, and then savings, that just helps to build the discipline of doing that on a month-to-month basis, especially if you haven't been doing it so far.
Yep. Yeah, that's right. Then you can actually break it down further to, okay, what kind of falls into those needs and what categories, because sometimes you want to be a little bit more strict on your budget categories rather than being so broad. So I'm going to share my screen. If you're listening, I'm going to talk through it. So the first thing is going to be, if we look into needs, that would be housing, transportation, and food. Housing, I like this rule of thumb, 25% of your income spent on housing. So this looks at your mortgage, your utilities, and insurance, trash, water, gas, electricity, as well as your mortgage or rent payment. Transportation, that's a car payment, that's gas, insurance, public transit if you live in a big city. And lastly, food, kind of groceries and restaurants. That's how I categorize it personally, is groceries and restaurants. That's our two kind of factors of food and spending. There's your needs. There's basically what you need to get by. Further breakdown is kind of the wants area, is the personal spending, which is the entertainment, any other sort of hobbies, getting your nails done, stuff like that. And then of course the savings and debt repayment, which is anywhere from 5-10% to 20%. Anything you would add on those categories, Miles?
Yeah, I would just say I think one of the big things to your point, like looking at that is, I think any good budget for the most part should be built around those top three things. In that, when you're looking at setting up an emergency fund, maybe, and we talk about that 6 months of cash easily accessible for whatever reason, in case you lost your job or had a couple slow months, if you're on maybe a commission-based job, is those top three things are the ones I think you need to consider as, I mean, we call them needs, but just to kind of go a little bit deeper, as the important things that you have to be able to cover, even if your income went away. Whereas maybe some of those other things can drop off a little bit as far as, eating out or entertainment, et cetera. But when you're looking at an emergency fund, really taking into account those top three pieces as what that is to have set aside for 6 months, knowing that everything below there, for the most part, I think there were a couple things that you could maybe mark as a need also, but for the most part, everything underneath those top three, that if you truly needed to, if things got tight, you could cut those out for a couple months and still have all your bills met when you're thinking about what type of emergency fund to have as part of your budgeting.
Exactly right. We use that 3 to 6, 3 to 12 months worth of living expenses is as cash in the bank. And that's a good practice to learn about your needs. What would it take for you to really, really slim down? You lost a job, you had no income coming in. What would it really take if you had to really tighten the hatches and batten down the hatches and make sure that you were just spending money on items to live? And that's probably that 50% needs benchmark. So again, on the circumstance earlier, if you're grossing 10 paychecks of 10 coming in, your needs fall into that 5,000 a month or so that it just takes to live and operate, and then have at least 15 grand of cash sitting in a savings account. Ideally closer to 6 months, 30 grand. But you can obviously work your way up to that. But that's, there's no perfect budget. Everybody's budget's different. Everybody has different priorities in life. Some people have a bigger priority. If you tithe or give to charity, you want to make sure that that's right up there with savings, paying yourself first. You could view that as, okay, if we got 10 grand, give 1,000, save 1,000. Now I'm working off of 8 grand. That can be a priority for some people, which is perfectly fine. It's different. Really just learn about yourself. These are good benchmarks just to base a budget off of, but your best case scenario is going to be looking at your spending and learning about yourself and just looking at yourself and saying, do I like how I spend my money? Do I like how I save my money? Where are areas that I want to improve upon myself? Not just because a benchmark tells me I should, or because a website of how I should budget tells me I should, but maybe you like spending a little bit more on vehicles because you like cars, or you're a hobbyist. You spend more, you like driving more and you don't care about the house you live in. I don't know. I'm just coming up here to say it's going to be different for everybody. So take these as just a rough rule of thumb to live off of, but cater it to yourself and your own spending habits.
Yep. Well said. And I think the last part is just to review a budget. And as time goes on, things happen. Hopefully you're growing your income, growing your investments. And so as you're making a little bit more money, you're adjusting these numbers. And, maybe you go from making from the start, you're at $10,000 a month. Now you're making $12,000 a month. And so building that extra $2,000 into the plan, whether it's savings, spending, probably some combination of all the budget categories, building that in to grow, lifestyle, if that's something you're wanting to do as well.
Mm-hmm.
And then at least annually, I mean, for sure, reviewing budget, probably good to do maybe even every quarter or 6 months, depending on especially getting started. I think the more often the better, maybe even monthly or quarterly. As time goes on, probably something that you can do, semi-annually or annually to make sure that it's still working and makes sense for you.
I think so. I think, as you get used to it, obviously you've got to categorize your spending to know where you're at. So that might take, especially at the beginning, a little bit heavier activity. Maybe it's a review on a monthly basis as you're trying to get used to it. Even for myself, I don't, with our budgeting and expense tracking that I do for our family, I don't sit down and just think, high level, okay, how do I feel about this month? Every single month, it's probably like you said, more of like on a quarterly basis. I know I have the data at my fingertips because websites and software allow you to have that at your fingertips as long as you're categorizing everything. But I'm not sitting here and really planning out or having, a big thought session about budgeting and stuff. It's really because also stuff ebbs and flows a little bit month to month, and you kind of know what you're spending on. It's like, oh, we had that big vacation back in July. I know that month is going to be a little bit heavier on the travel section, but I think quarterly is a good cadence. If it's a pretty normal quarter, then maybe it's every 6 months. What matters is you're reviewing it to some extent.
Yep. Yeah, I think that's perfect. Hopefully this was helpful as far as if you're somebody who is, not on a budget and looking to get on one. I think this hopefully provides some good framework to get you started. And likewise, if you're somebody who has, been budgeting for a while and maybe looking to maybe tweak some things or adjust things, hopefully there was maybe a nugget or two in here that can help to get you on point with where you need to be.
That's right. If you have any thoughts or questions or challenges that you would give us on budgeting or any tips that we could share with the audience, feel free to shoot me or Miles an email. Let us know what you think. We'd love to hear it. But otherwise, thanks for listening. We always appreciate the audience and the feedback we get on these episodes. We'll have some more content coming next week. And thanks for joining us today.
Yep. Have a great weekend. Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.